Hey there guys, in today's video we go through two terms that are used almost interchangeably in the mortgage industry, and that being a pre-approval and a pre-qualification. Unfortunately, these terms have drastically different meanings, and so depending on which one you have will dictate how confident you should be in purchasing your next property, whether it's for investment purposes or for you and your family to move into. My name is Matt Kelly. I'm a mortgage agent with Mortgage Architects based out of the St. Thomas and London, Ontario area. And today we're going to kind of go through those terms so that way you understand exactly what you have, and if it's a pre-qualification, what you need to do in order to start shopping with confidence. So you're looking for a property and it's exciting, it's awesome, and congratulations, because that's really something that you should celebrate. And one of the first steps you should take is making sure that your finances are in line, so that way you can shop with confidence and give the realtor and the rest of the members of your power team the information that they need in order to help you acquire that next property. You've probably heard it many times, oh, go get a pre-qualification or go get a pre-approval. And the reality is that a lot of people use the term interchangeably, but as I mentioned in the top, they are different. So if you ever hopped on like a bank's website or a service provider like RateHub, or maybe it's CMHC, there's a lot of providers out there with their own calculators. You know, you've input your income, you've input how much you have saved for a down payment, maybe some monthly credit obligations, and then it shoots out this magical number and it says, based on the information you've inputted, you can qualify for a mortgage of X. This is a pre-qualification, and although it's a very good first step in starting to look for a home, the reality is there's one huge problem with the pre-qualification. And the fact is that it doesn't double check any of the information that you've put in. So for example, if you've run some numbers and let's say you've put in that you make $70,000 a year. Well, it's great if you make $70,000 a year and you're not like an hourly employee who maybe just made $70,000 this year, but last year made $50,000. And so that is the big hole with the pre-qualification, is that it doesn't double check any of the info that you put in. So where's a pre-approval different? The answer is probably pretty obvious at this point, and it's that it double checks all the information that you put in and actually takes it one step forward. At this point, if you've watched any of the videos that we've put out before, you know that there's something that I like to call the financing formula, which is it looks at the three major aspects of a pre-approval. And they are your income, they are your down payment, and the third part, kind of that three-legged stool, if you want to think of it that way, is your credit history. So when you go through and you get a pre-approval, it's going to make sure that the income that we put into the mortgage application is accurate. So if you're an hourly employee or you're a salaried employee, it's going to involve getting a letter of employment, looking at your pay stubs. It may require looking at your last 2 years of T4s, especially if you're an hourly employee or somebody that gets overtime. And if you own your own business, that's great. You can still absolutely get a mortgage, but it's just going to mean that we're going to need to look at your last 2 years of tax return. So that's the income piece. When we look at the down payment, what it involves is, especially if this is your first home, it's going to make sure that you have an adequate amount of down payment saved, and it wants to see where that's coming from. So that could involve getting bank statements together or getting some TFSA or RSP statements, so that we can make sure that the amount you need for your down payment is available to you. And the third piece is that credit piece. So it involves, pulling your credit bureau and seeing, not only what do you pay each month, but do you have any issues with your credit history, so that way we can get in front of them and help to improve them as we go through kind of the mortgage and property buying experience. So as I kind of alluded to, the only way to get a pre-approval is to do a mortgage application. And that can be done whether it's through the bank or through a mortgage agent / mortgage broker. Those terms are used interchangeably a lot as well, and we can do a separate video on that. But the important takeaway is that a pre-approval requires a mortgage application, which also does include getting your credit bureau pulled. And it's worth noting that this credit pull is a hard check, and you do want to avoid a lot of credit pulls, a lot of hard checks, as this will negatively impact your score. This isn't a video that's about the differences between using a mortgage agent or mortgage broker and using a bank, but one of the advantages of using a mortgage agent or using a mortgage broker is that when they pull your credit once, that can be sent to multiple lenders. I know in my case, if I do a credit pull, I have access to over 50 lenders that can all use that same report if it gets sent to them. Whereas when a bank pulls your credit, they can only use it for their bank. So to wrap this video up, a pre-qualification gives you a good idea of how much you can spend, but a pre-approval is absolutely what you need in order to shop with confidence and start looking for that next property. So hopefully today's video cleared that up for you. I know it's something I get asked a lot about, or is part of our original onboarding calls that when we talk about not only clients' goals, but where they're at in the process. And especially, I've had a few eye-opening conversations with clients over the years where, they're happy because they have a pre-qualification, but we need to double check that information. We need to get a pre-approval in place. So hopefully you found this video useful. If you did, please consider sharing it with a friend. And if you're looking for more videos like this, please subscribe to the channel as we're going to be putting out a lot of this content over the next little while. So thanks for tuning in today, guys. Have a great day.